Good morning, everyone, and welcome to this webinar, co-arranged by The Bridge and Sustainable Future Hub at Lund University, School of Economics and Management. The topic of today, corporate taxation and social responsibility, a very exciting one. My name is Jonas Klevhag, and I work as a collaboration director for The Bridge and a moderator today. I will host this seminar and spread the questions all over the floor. The Bridge exists to connect science and technology on one hand with the business and societal development on the other one, to push humanity forwards towards the Sustainable Development Goals. We have a tough job, but we enjoy it. We do that by arranging these kind of events. We do it by spreading knowledge and creating networks around these topics. We also do it by facilitating collaboration projects where we get local or technology or science initiatives from the Bridge region, that is South Sweden and Eastern Denmark, to connect with local stakeholders around specific challenges around the world. Sustainable Future Hub, on the other hand, our co-arranger today, co-host, is a collaboration hub for students, researchers and external actors focusing on economic and social sustainability. Sustainable Future Hub catalyzes projects as well, and collaborations where different actors can work together to drive development in the area of sustainability. So there you have us. Economic paradigms have allowed humanity to prosper in various ways throughout history. Taxes have played a substantial role, regardless of the paradigm, in fashion. And when you think about taxes, you usually regard it as something dull or boring, or a must-have, or penalty or punishment or boring thing to address. Or unless you're very heavily into taxes, as today's panel is. But from a breakfast table point of view, we regard it perhaps as something quite technical and difficult, when in fact it's actually something quite simple, a simple idea and quite beautiful one. Everybody chips in a little for the whole community to actually achieve things that are far greater than the sum of its ingredients. And that's really what society is about, I think, to compromise a little with yourself to actually be bigger than, to let the community prosper and serve humanity in a bigger scale. So if we could take that perspective and actually turn taxes into that kind of beautiful idea, at the same time as we allow it to be the highly professional area of expertise that it is in finance and corporate operations, then I think we have a powerful tool. So since a couple of 100 years, we've managed to develop ourselves into a number of blind alleys: combustion cars on fossil fuels, diabetes by dysfunctional nutrition, mass extinction by dysfunctional food systems, to mention just a few. So these are usually the result of and the economic paradigms have played a role in this. At the Bridge Summit in October, we explored more broadly how new economic thinking could hold the keys to reaching the UN Sustainable Development Goals by 2030, or as JFK would have put it, before this decade is out. Today, we will take a closer look on how the taxes, or taxation in particular, can be a tool to achieve this bold and hairy goal of 2030. And we have the most distinguished panel to help us out. Axel Hilling, Associate Professor in Business Law at Lund University School of Economics and Management. Lorena Sorrentino, Manager Markets at CSR Europe. Anders Tegelberg, Head of Tax at Swedish energy company Vattenfall. And your interaction as an audience is very important to us. So please ask us questions in the comments field of wherever you're following us. If you're on YouTube, there's a commentary field where you can add comments. If you're on Facebook, there's a comments field where you can add your questions, and probably in whatever channel you are actually following this webinar. Make sure that you actually ask your questions there, and just to make sure it works, would you please just state your name and your organization in the comments field right now, so that we can see that it works, and then we get a grip on who you are actually following us today, so we make the right address. Right, so let's get on with the proceedings for today. We will start by listening to Axel Hilling, and I would like to ask Axel to give us a background on and an academic outlook on the field of corporate taxation and social responsibility. Perhaps that will be sort of an abridged version of his book with the same name. But we will, after that, listen to Lorena Sorrentino give us an outlook on the European perspective. How's this going amongst the companies in Europe? And finally, we'll get on to the more hands-on corporate tax, the everyday work of a corporate head of tax in a company, in a large company, to see how this actually works, and then follow up with a panel with all three and some other perspectives. So thank you for joining us this morning. And Axel, are you ready to give us your ideas and thoughts on the background and the outlook of academic outlook of this field?
Yes, thank you very much, and good morning, everyone. Thank you for inviting me to this seminar, and for letting me speak about one of my favorite subjects, taxation and sustainability. I'm a teacher and researcher at the Lund University School of Economics and Management. Can you see my presentation in your screen? Does it work? I assume that it works. All right.
Right now, I can't see your presentation actually. So.
Okay,
so you help us out here?
Hi, good morning. We can't see your presentation. Try again.
I try again.
We had tried this, but before. But of course, the Murphy Law is helping us out today, and giving us some extra excitement. We'll see if you can do the same procedure as this morning. Now we can see it. Excellent.
Okay, perfect. Well, so yes, thank you. Let's get started with this. And the purpose with my presentation is to explain why tax is an important sustainability issue, and to discuss how this issue is likely to affect companies. And I will start with a broad perspective, a societal perspective, and then go into a corporate perspective, and end my presentation with a focus on corporate taxation. And on each of these perspectives, I will spice up the presentation with a short video. This will take about 15 minutes. Okay, so when we talk about sustainability and taxation, it's important to know what we mean with sustainable development. And sustainable development was defined by Gro Harlem Brundtland as the development that meets the needs of the present without compromising the ability of future generations to meet their own needs. And this quote was founded in 1987 in the UN report, Our Common Future. And since then, this definition of sustainability has been the basis for UN's work on sustainability, which we best know in terms of development goals. And from the millennium 2000 to 2015, we had the Millennium Development Goals. And since 2015 and until 2030, we have the Sustainable Development Goal, 17 goals that we need to address in order to have a sustainable future. And in order to be able to address these challenges, we need to know how we got to this situation. Why did this happen? Why do we have those challenges in front of us? And let's ask Jason Hickel, what's the problem with today's policies?
Our addiction to economic growth is killing us. Right now, the entire global system is captive to a single idea: economic growth. Politicians rise and fall on their ability to increase GDP year on year. They promise that growth will make our lives better. But there's a catch. We can't have infinite growth on a finite planet. We're already overshooting our planet's biocapacity by nearly 60%. The consequences are all around us: climate change, deforestation, and rapid rates of extinction. This crisis is due almost entirely to overconsumption in rich countries. They use more than 3 times their fair share of biocapacity. Scientists warn that the only way to prevent ecological collapse is for rich countries to scale down their consumption. This is called planned degrowth. Degrowth is not the same as austerity. The goal is to increase human well-being and happiness while reducing our economic footprint. Instead of intensifying our plunder of the earth, we can share what we already have more fairly. We can cut excess consumption by curbing advertising and taxing carbon. Introducing a basic income and a shorter working week would allow us to get rid of unnecessary jobs and redistribute labor. But the first step is to overthrow the tyranny of GDP. GDP is a crude measure of progress. When we slice down our forests for timber or strip our mountains for coal, GDP goes up. When natural disasters strike or hospital visits rise, GDP goes up. It ignores environmental and social costs. It's time for a more sensible metric, like the genuine progress indicator, which takes GDP and subtracts these negative outcomes. It accounts for the costs of growth. We need an economic model that promotes human flourishing in harmony with the planet on which we depend.
Okay, so we have a challenge and a sustainability challenge, and in order to understand that for our governments, we need to understand the global goals and how they are interacted with each other. And with the focus on GMP, focuses on economic growth, but the economic growth is dependent on biosphere, the environment, because without an environment there cannot be a society, and without a society there won't be any possibilities to generate economic growth. So governments should not ignore environmental and social costs, because if they do that, the society will fall, and eventually also the possibilities for economic growth. And this wedding cake shape of the global goals is authored by the Stockholm Resilience Center and refers to the planetary boundaries. Okay, so we also heard that if the GDP is insufficient in order to have a sustainable policy for a sustainable society, there could be other signposts. For example, the genuine progress indicator, which subtracts the costs of, for example, the environmental costs and the social costs, which is a result of economic growth as we know it today. So this genuine progress indicator is a well-researched indicator that has been used in real life in some states in the United States and also some other countries. But there are other initiatives in the same directions. For example, the donut economy, which you might have heard of. It's a model which define the safe and just space for humanity, and that is in between the planetary or the ecological ceiling, which is set by the planetary boundaries, and the social foundation, which pretty much aligns with the Sustainable Development Goals. And there is also a well-being economy alliance. There are states that are focusing on policies which is not only reflect economic growth. And the three most well-known countries that are within this alliance is Scotland, Iceland, and New Zealand. So this is pretty much new signposts in order for the government to have us have the society going in the right direction. But there are also corporations that have taken this challenge, taking on this challenge, and that report environmental and social costs in their business. And one such initiative is the B Corp, that is benefit corporations. And if we now leave the societal perspective and go into the corporate perspective, we know that we have a situation where production and consumption does not create value for the society as a whole. On the contrary, and if we look at this flow chart where the gross national product goes up steadily, the genuine progress flattens and decreases. So this pretty much is the cost for social and environmental costs. We see this, and the theory to deal with this problem, because it is a problem if we would like to have a sustainable future, it's called the stakeholder theory. And the stakeholder theory is 50 years old. It was first authored by Professor Klaus Schwab, but it is best known the person best known for the stakeholder theory is Edward Freeman, who wrote a book about it in 1983. And this theory is pretty much that the producing and consuming entities, and that is companies, they need to create value and distribute value to all stakeholders in society, not only to shareholders, but to all stakeholders in society. And we know that the stakeholders in society from a sustainable perspective is pretty much environment, society, and shareholders and economic growth. So the stakeholder theory, it generates value which is distributed to the society as a whole, but we do not have any measures to report this kind of value. So a big challenge is to find ways of measuring corporate performance, to measure the value that is created, the societal, environmental, and economic value created by companies. And there are legal efforts in this direction. For example, within the EU, they are trying to, or they are supposed that they are taking initiatives to improve the regulatory framework for companies in order to make it more aligned with the sustainability, and it aims to better align the interest of stakeholders and society. So there is legal efforts in this direction, but there are also private efforts in order to find ways of measuring stakeholder value. And I will now show you a movie or a short video clip from the World Economic Forum half a year ago. Okay, so let's play this.
This will allow executives, investors, employees, and other stakeholders to see how the company performs on matters that reflect society as a whole, such as climate change and biodiversity, workplace diversity and inclusion, and good governance. And as a consequence, they will help a sea change in the way companies are run and evaluated.
How do you align capitalism with the goals from society, and how do you make it happen, and how do you measure that, and how do you do it in a way that can consolidate all these measurement systems, bring one set of metrics that the big four accounting firms that we'll hear from my colleagues and that can endorse and help companies get through and publish so people can judge whether they're making progress. Because the research shows that companies who don't make progress on ESG goals or SDG goals tend not to do as well.
Okay, so the takeaways from this video is that stakeholder capitalism, which is pretty much stakeholder theory, it has been gained ground among corporations, and there have been a development to find a common set of metrics in order to report value creation to all stakeholders in order to hold companies responsible for their impact in society. And the normative basis for the measurements is the UN's Sustainable Development Goals. So we're heading a greater amount of transparency, and we also need to get familiar with the ESG measurements, because the big four accounting firms, they have developed a white paper where they have developed metrics in order to report this, and one of those metrics is taxation. ESG, which is the baseline for reporting, it includes all those environment, social, and economic goals, and it includes tax. And now we have concluded that taxation is one of the metrics that will be reported in a stakeholder capitalistic environment, which is gaining ground among multinational companies. So we can ask why taxes, and the short answer is probably what Oliver Wendell Holmes said already in 1927: taxes are the price we pay for a civilized society, or we can change civilized society to a sustainable society, and the sustainable society is as a society where all the global goals are fulfilled. And we need taxes in order to finance the non-commercial interest within these global goals. So in order to finance non-commercial global goals, we need governments to do that financing, and the governments can do that financing only if they can collect taxes. So that's why taxes is a very important sustainability issue. But when the corporation should report taxes, they need to report it from their perspective, and the perspective of taxes can be fundamentally different depending on how you look at it. It could be this figure here could be 6 or it could be 9, depending on how you look at it. And the traditional way of looking at taxes is pretty much that it's a theft of the government of your own property. So the government takes your property, and the purpose of the business is to provide is to generate profit to the shareholders, and because taxes is not increasing the profit of the company, then it's the business of the business to decrease taxes. Okay, so this is one way of looking at it, and we generally call this the shareholder perspective. But the other perspective is to take a more societal perspective and see that the overall purpose with all activities is to create and maintain a just society. And in order to do so, everyone has to pay the fair share of taxes. And this is more of the stakeholder theory. So if we take perspective on tax, you can either report it as a corporate cost, which should be reduced, or you could report it as a public benefit, which is your contribution to a just society or a sustainable society. And there are legal efforts in this direction that you have to report your taxes. A couple of weeks ago, the EU member states had a qualified majority that within EU one should have public country-by-country reporting. So now there is negotiations among the countries how this public country-by-country reporting directive should look like, and the draft says that you should every company within the EU should report their taxes paid and the profit before tax and so on within the EU, but also if they have any activities in countries that are on the EU blacklist. So public reporting of taxes that is due within the EU or on the EU countries on the EU blacklist. But there are some shortcomings on this country-by-country reporting initiatives. It excludes almost 90% of all multinational enterprises because it only covers companies that have a turnover of more than 750 million euros. Mm-hmm. And it does not include tax reporting in developing countries. And developing countries are the countries that are hit the hardest when it comes to profit shifting and aggressive tax planning. So exactly how this directive will look like when it is adopted, probably later this year. No one knows how it will look like, but there will probably be a directive which require corporations to present public country-by-country reporting. So for many corporations, probably it's time to see what's in the closet and perhaps clean out some skeletons. But although this regulatory process has gained ground the last couple of weeks, there has been development outside. It's been private developments, for example, from the Global Reporting Initiative. They have launched a tax standard 1 year ago, and I will now show you my last video about tax reporting, how it is done in practice.
Okay.
Taxes, they are a crucial source of government revenue and play a vital role in enabling countries to achieve the Sustainable Development Goals. Today, there are growing calls from civil society organizations, investors, and the public for greater tax transparency. These groups are interested in whether or not companies are paying their fair share. They want to know more about the tax practices of multinationals in the different countries in which they operate. Meanwhile, for investors, this information can help improve understanding of associated risk and sustainability performance. GRI has responded to the call for more transparency by developing the first global sustainability reporting standard on tax. By using the GRI Tax Standard, your company can report on its management of tax, as well as country-by-country information on business activities, income, and taxes. Companies that are transparent about tax can support a dialogue with their stakeholders and meet their expectations. They can also demonstrate leadership, improve their reputation, and show commitment to the communities where they operate. The new tax standard, GRI 207, is freely available now for all companies. Your company can begin preparing now for disclosing information on tax in a way that meets global best practice. Start your reporting journey today. Download your free copy of the tax standard and visit the GRI website to learn more about how we can support you.
So, to summarize now, we have talked about sustainability. There are political challenges to represent all interests in society, the environmental, the social, the economic, and there are corporate governance challenges to create value to all stakeholders in society, environmental, social, and governments. This stakeholder capitalism, it's a new way of measuring corporate performance and using the ESG metrics, which includes tax transparency, where we can look forward to see public country-by-country reporting and public tax policies. And when that happens, we will have a happy planet. Thank you very much for your attention.
Thank you very much, Axel, for giving us this broad perspective on both the background, the issues, of course, that we are well aware of in terms of the Agenda 2030, and how to connect them with the existing corporate and capitalist systems or dynamics that we are used to working in. I will save my questions for the panel, actually, because we're running a bit short of time. So I will switch over to and ask Lorena to join us. Good morning, Lorena. You're located in Brussels right now, are you?
Yes, exactly. Yes. Good morning, everybody.
Good morning. Is it as a lovely morning in Brussels as it is in Malmö this morning?
Not really. It's a bit cloudy and rainy as usual, but it's okay. Can be worse.
Later then. You are the manager markets of CSR Europe. And CSR Europe is an association looking to promote transparency and sustainability in tax, and in corporate behavior in general terms. Would you please share what your experiences have been in CSR Europe working with corporations in Europe on promoting transparency?
Yes, thank you. I will just quickly share my screen and make sure that you see the slides, and then let me know if it's okay.
It works.
You see them full screen, right? Okay. So again, good morning, everybody. My name is Lorena Sorrentino, and I'm working as a manager indeed at CSR Europe. That is the European Business Network for Corporate Social Responsibility. In the next minutes or so, I would like indeed to share our perspective and our take on why also working on responsible tax is an essential tool to enable a sustainable future, but also speak about the experience that we have with a number of companies in promoting a more responsible and transparent tax behavior, and how can companies move forward in this journey. So just quickly as an introduction, for those of you who don't know CSR Europe, as I said, is the European Business Network for Corporate Social Responsibility, and among our, let's say, actions and missions, we aim at promoting sustainability throughout, let's say, business processes and operation, mainstreaming sustainability at large from an environmental, social, and governance point of view. We have a number of corporate members that I will show you in a moment, but also a wide number of national partners organizations, so CSR networks like us that act at local level and enable us to reach over 10,000 companies all over Europe. And we indeed act as a platform to facilitate best practices sharing, peer-to-peer learning, but also have in place a number of tools and services that can help companies integrating better sustainability into their business practices and operation, including for what it refers to tax responsibility and transparency. Here you see just a recap of who are our corporate members, but also the national partners and a number also of associated organizations with who we collaborate on an ongoing basis, also indeed the University of Lund on this specific topic. So just to kick off the discussion around the transparency also was touched upon by Axel before at the European level, also to bring you, let's say, this perspective from Brussels. There is a lot going on, especially this year, about how the EU is trying to enhance transparency and the policy framework around that for what it concerns corporate disclosure. So you see on this very busy slide a number of important milestones that are ahead of us this year. First of all, the revision of the non-financial reporting directive, but also, as was mentioned also by Axel, the sustainable corporate governance dossier will move forward. We will have a proposal that will look at due diligence, but also clarifying directors' duties on sustainability. There will be a number of developments around sustainable finance, especially in relation to the taxonomy, this classification system that enables investors to identify sustainable activities to which invest in. And where is tax in all of this? You heard it also from Axel, so I will not go into details about that, but tax also in the last weeks has seen an acceleration in terms of the dossier related to country by country reporting that was a bit stuck in the Council of the EU for a long time. They managed to find an agreement, and at the end of March, the three institutions, so the Parliament, the Commission and the Council, will start the trilogue negotiations. So hopefully throughout the year we will hear more about this dossier that will even give another push and attention to such a topic at European level. So why, as a European business network on corporate social responsibility, we work on tax and we give attention to such a topic? First of all, because also, as you have heard from the introduction of Axel, there is a number of increased expectations towards a company on this area, both in terms of the international and EU policy framework. So not only what I just showed you in terms of EU policy framework, but of course all of you are familiar with what has happened since some years at OECD level with the BEPS project and its related developments. Then of course there has been an increased attention from a society point of view, also coming from the scandals that we are all aware about, so increased attention from media but also civil society, and also in more recent years also increased attention from investors that are looking not only at the ESG impacts of companies, but indeed as part of the G also looking at their tax behavior. Also, we started to work on tax, and we believe is an essential, let's say, fundamental CSR matter, because this has become in recent years something that a company cannot avoid to speak about, especially if they want to be, especially if they position themselves as a sustainable company. Also because, and in relation to the discussion about the SDGs, tax represent a critical resource for the implementation of such a goal, but at a general level, as we heard also before, tax represent a fundamental resource that governments use to invest in fundamental resources in education, in the health system, in infrastructure, and even now with the current COVID-19 situation and the recovery related to that, tax become even a more important tool to help to help government improve the situation, and that is why the role of companies in it become more and more important. Coupling this, of course, with elements related to brand reputation and risk management, the respect for human rights, but also as a way to showcase a commitment to the development of society and rebuild the trust of stakeholders and society at large. So we started a journey around 5 years ago to work on these topics with a number of companies, and let's say it has been a very interesting, it is still a very interesting journey, but of course where there are a number of challenges, of course, and needs from the point of view of companies in terms of, a number of pending situations related, for example, to the fear of public scrutiny, the lack of dialogue that sometimes there is between multinational companies and civil society, finding also a balance between transparency and the protection of confidential information. These are, let's say, some elements that when we start to speak with companies about this topic, that is still a very sensitive one we encounter. But of course, there are also a number of countermeasures that throughout our work we have identified to support companies towards a more transparent and responsible tax behavior, considered as a journey of continuous improvement that, of course, includes, first of all, an internal effort that the company have to set in place in terms of collaboration and endorsement also from a management point of view, as well as an effort in terms of the external stakeholder engagement, in terms of the transparency exercise and the narrative on the total corporate contribution to society that the company should put in place, also to explain externally where they are in terms of this journey. And let's say once that we go to speak to companies on this topic, of course, one of the questions is that why we should invest resources on such a topic. And of course, there are a number of potential reasons, and we will hear it also from the practice of Vattenfall afterwards. But of course, there are a number of benefits to start this journey, both in terms of reducing, for example, the adaptation cost, as the EU, as we heard, is working on a number of legislative proposals to prevent aggressive tax planning, but also improve the position and the credibility of a company CSR sustainability strategy, because of course you can be a champion in respecting biodiversity or having a perfect model for circular economy, but then if you move all your profits to the Cayman Island, is not very consistent, let's say. So as Axel said, also companies should start cleaning maybe the skeleton that they have in some of their closet, also to be more credible, and also, as I said before, to rebuild the trust towards society at large. And in our work, we have started to engage with companies and support them in this journey through a number of tools and services. First of all, an assessment that can help them understand where they stand on tax transparency and responsible tax policies, but also to facilitate the first element that I mentioned before, the internal buy-in, that sometimes is a very challenging step, in particular when it comes to the interaction between CSR and tax departments that sometimes don't speak to each other, but for such a journey to become more responsible and transparent on tax, they need to work together, especially for what it concerns embedding sustainability into corporate tax policies and vice versa. And then we have put together also some other kind of services and support, like a blueprint, and I will mention something in a moment, but also a number of other opportunities for companies to learn and see how they can improve on this area. So in terms of the assessment tool, very briefly, because I'm aware of time, we have put together, let's say, this tool that looks at these 6 building blocks that we believe are the key element when we speak about the responsibility of companies in terms of tax. So starting from tax planning practices. So if a company aligns the taxation to the place of real economic activities, but also if they have in place a number of perhaps aggressive effective tax planning technique. Then an important area is also the management and governance, so how a company manages the tax function internally, both in terms, as I said, of the involvement of the CSR department, for example, but also the board and the management buy-in that is very key to advance on this agenda. Then, of course, specific attention to the area of transparency and reporting.
I don't think we can hear you now, Lorena. So are you?
Yes.
Now you're back. So we lost you just before you switched to the last slide, and then we need to wrap up within a couple of minutes.
Yeah, definitely. So I just wanted to show this. This is a blueprint that we have produced together with PwC Netherlands. You can find them. You can find it on the internet. So yeah, you can Google it afterwards. I will not go too much into detail, but it's also a resource for companies if they want to understand more the concept of responsible and transparent tax behavior, but also hear from some examples of companies that have already embarked in this journey. You see the logos here on the right-hand side of this slide, but also includes an inventory of various initiatives, principles, and guidelines that already exist on responsible tax behavior, including the GRI standards, so that can be helpful also to learn more of what is already out there to move forward on this agenda. So I will that I know we have to close, so please have a look at the blueprint, and if you have also questions, I'm more than happy to reply to them. You will find also some trends that we have identified in terms of key takeaways for companies to work on to improve in their transparent and responsible behavior, but also of course some open challenges, like for example the role of the tax function within a company, but also assessing the impact of elements such as the tax incentives. So I will close it here so that we still keep it on time, and thank you very much for your attention.
Thank you, Lorena, for that very encouraging outlook on the European tax transparency work going on and the resources available to engage more. I will skip questions directly to you now, and to have Anders' perspective before we get to summarize in a few. Or do you have to leave us before Anders is done, Lorena? Do you have to leave us within? Do you have 10 minutes?
Yeah, I have to leave at 10. I have to leave at 10. Yeah. So yeah.
Anders promised us a short touchdown on the actual happenings of the tax department at Vattenfall in 5 minutes. So hopefully I'll be able to summarize a few questions before you have to leave, Lorena, if that's okay. I just want the full picture before we open to the panel. So Anders Tegelberg, welcome this morning as well. Are you joining us from Stockholm this morning?
Yes, correct.
Good. And you have promised to share a bit. So this is all nice perspectives on academic, makes sense from an academic point of view, historic point of view, financial point of view, and obviously happening a lot from an EU and point of view as well. But what does this really mean for a head of tax at a big energy company like Vattenfall?
Yes, thanks, Jonas, and thanks all for having me. I have no slides or no video, but I will get a short presentation of Vattenfall's journey in this. And as mentioned in the past, this is a topic that is actually continuously development. And for Vattenfall, we have worked with this for over a decade, and we have taken different types of steps, and it has not from start been easy, because this is having a tax department that this is not your core expertise or competence to handle a sustainable tax item, and that was not discussed so much in networks and in other companies or so. So things has moved, and today there are. Yesterday I participated in a network where a big multinational company that said that now is the time to take the next step to be more transparent, and the key question was, of course, why now? And the simple driver for that was that this is where the winds are blowing for that company. So, looking back, what Axel and Lorena has presented, there has been a journey of different types of legal efforts and private initiatives to reach to the next step. But for Vattenfall, we are an energy company, and sustainability is core for us. This is in many areas what we believe in to make it our business concept and to have a fossil-free generation within a lifetime. And tax should support that transition. And for Vattenfall, of course, on the other hand, we should have a stakeholder value to secure that we have a good handling of our taxes. And on the other hand, we should also be transparent and so. So when we started, we established a tax policy and governance, and we got questions from NGO and media stating that maybe you have an effective tax rate that is very low, aren't you aggressive? And then try to explain that. And then I think the lesson learned is that this item needs to be discussed from different angles and perspective to make this as you mentioned, a breakfast topic. That is for me something that is interesting, because when you're into this and talking to your peers, of course, the head of tax of different departments are more interested into this now than in the past, but still it's not their maybe core interest. So I think for us, the next step, what Vattenfall would like to explore is, of course, what is a good tax behavior, except for this public country by country reporting, different legal efforts, and do not tax avoidance, aggressive tax planning. That is, of course, not something that you would like to do, but also which type of the standards can you discuss in the breakfast? What company is good and which are bad? Because I think in this area it is a legal framework that stipulates what is tax law, and then of course different countries have different aspects on that they would like to increase the tax base, of course. But so for us, it's more having a label on good tax behavior. I think that is a challenge, because one last example is for me personally, and it was a company that was addressed to be a Swedish retail company that in media seems to not be having a good tax behavior, and I cannot do my purchase there anymore as a private consumer. And I think that is maybe, but I don't know the competitors, are they as bad or so I think that is also something that I think, is this a benefit for the company? I think that is the driver for in-house to see that this is something that the society and the consumer expect for the company. So maybe I stop there.
Okay, thank you, Anders. So you're actually asking, Vattenfall has adopted a policy on good tax behavior, but then you get questions on efficient tax rate and whether that's high or low, and how it could be that low, or you get questioned on that. So then you actually ask for the breakfast table discussions on tax behavior to also include a broader perspective, that you have both a stakeholder perspective on your tax policies. So the question should not be whether it's just an efficient tax rate that's high or low. It should be what you deliver to society in a broader perspective. Is that what you're actually asking or suggesting that we should broaden the discussion?
Yeah, I think so. The total tax contribution for the company, what is the footprint for the company? It's the financial ratio and the effective tax rate is not a good key measurement from my perspective. But this is a complex area, of course. So, and also it's important to state that the company that doesn't pay tax is not a bad company. It makes losses, and you need to have a profitable business to pay tax. So this is also an aspect, of course. And if you are an entrepreneur building in a new business, then you have losses and you don't pay tax, but maybe you provide other tax payments except for corporate tax.
So thank you so much, Anders. Can I bring Lorena and Axel back into this discussion here before Lorena has to leave us, and just expand the question here back to you, Lorena. The EU taxonomy directives or decisions that have been made recently, have you seen that this actually affects your work and the company's willingness to look in this direction, in a broader stakeholder direction, rather than the classical shareholder directions?
Yes, definitely. I think in the last year or so, all of these developments at legislative level have pushed many more companies to look in this direction. Also, in the way they can measure and report the impact that they have on society. So on all of the 3 areas of ESG, and also the situation that we are living today. Since the COVID outbreak has also enhanced this attention and this, let's say, light on these issues. Also because since the situation that we are living since 1 year, everybody, I'm talking about policymakers, but also civil society, consumers at large, are looking really more and more about what is the contribution of a company to society, what is the societal impact now, even more, besides, of course, climate, that was already, let's say, a hot topic that was already developing in relation to the TCFD recommendation, in relation to Paris, in relation to what is happening at EU level, but now also on the S, on the social part. So what is the contribution and the impact that the company has in terms of the health, that they take care of their employees, but also of the local communities. So I think there is a lot of momentum that comes from both parts. So the policy environment, but also the societal attention that has increased.
We saw that in Axel's slides that 85% are unfortunately of the companies are unfortunately sort of not addressed or eludes these law bills or these new regulations. But so there's a long way to go, obviously. But you're doing a great momentum and creating momentum and doing great progress. So one question that I would like to expand to all of you, but start with you, Lorena. To me, it seems like the stakeholder perspective simply has a longer time horizon than the traditional shareholder perspective usually has, where shareholder reports usually focus on a quarterly time horizon, 3 months. We are talking here about 10 years. The stakeholder perspective looking for the 2030 agenda, that would be 40 or 30 months rather than 3 months perspectives. And frankly, that's really, if you could expand the horizon of a company to 10 years rather than to 1 quarter of a year, wouldn't that be the solution to connect all of these incentives and scopes? And how do you go about to turn these 10-year perspectives into a quarterly mindset? How do you make a quarterly sense of urgency out of a 10-year challenge? First, you, Lorena.
Thank you. To reply, no. Thank you for the question. I think it's very interesting, and indeed also the things that we see around us, also in terms of developments at policy level, go in this direction to try to shift this short-termism that we have in the shareholders' approach towards more a stakeholder approach. Also the sustainable corporate governance dossier that was also mentioned by Axel goes in that direction. And of course, this will enable also to have a bigger horizon on the activities of a company. And that, I think, it's already sort of happening or started to happening from also the investor point of view, because also in our work we engage a lot with investors, and also they are shifting, their mindset towards where they can invest that is more oriented to a sustainable future. So really try to identify where are the avenues that can give them this more of a long-term horizon, and so taking into account the ESG elements of companies. Of course, is not easy because inside of a company there are different departments. So there are some guidelines. It's the same, when you speak about tax. In theory, the purpose should be to reduce the tax for your company. You not want to pay more. But so this kind of dichotomy is still there. But I think that more and more we see that the role of the CFO in a company is becoming more important on the sustainability agenda, and we really see how much also with a number of initiatives that are happening at international level, like the UNGC CFO task force, to try to also get attention and sensitivize the CFOs also on this agenda, so that they can collaborate then on the sustainability approach of the company. So I think the internal shift also has to happen first inside the company. I think the role of the CFO is very important, but also the pressure and the expectations from policy and civil society can help push also in the right direction.
Okay. Yeah. So we need leadership that is informed and knows about the opportunities.
Exactly.
Thank you very much, Lorena. I thank you for your participation this morning and allow you to hurry on with your Brussels duties. And we will reconnect if there are any more questions directed your way.
Definitely. So thank you very much for the attention. It was a pleasure to be with you, and good luck with the rest of the discussion. Bye.
Thank you, Lorena. So I continue with the question to you, Axel. You mentioned that connecting, there are new ways, new metrics introduced, the GPI and the GRI Tax. Well, different metrics to actually include a broader perspective. Would they be a key or tool to turn the 10-year seminar discussion into a quarterly or a morning discussion at home?
Yeah, thank you. Perhaps. Well, I don't think. I think the most important thing is that education and information about sustainability and the challenges that we have in front of us. So, if we have an informed consumers and informed employees and so on, then those metrics could be used as an instrument to scrutinize the corporations and to make informed choices. So I think the greater challenge that I find in my profession as a lecturer at the university is to kind of change what we have done so far when it comes to economic research, and when it comes to tax research, how we look at taxation, how we look at taxes. We have to look at all those fundamental concepts in a new way, where we also include sustainability challenges. Mm-hmm. And when we do that, and when we have spread that knowledge, then those metrics will be of great help in order to evaluate our choices.
Okay, good. Yeah. So, and Anders, you are obviously in the midst of this. How do you see that these long-term values that you are working with in your tax policies internally at Vattenfall connect with your quarterly progress or your more short-term company or corporate progress that you need to report on still?
Yeah, I think it's a challenge, but still, as mentioned, if there is a benefit for the company to take this step towards a more sustainable tax policy and tax handling in the company that is assessed by the consumers or other stakeholders as a foundation that or employees that will join the company, that is the other companies will not will be out of business if they are not taking the steps. I think that is one of those. But still, of course, this quarterly and to make the taxes efficient as possible. That is, the role of the company, and that will continue, of course. But there are not a black and white scale here, I would say.
And you mentioned also a stakeholder perspective. How do you regard your stakeholders besides the shareholders? How do you define the stakeholder groups?
Yeah, it's we have a lot of stakeholders internally, of course, but other is of course our owner and the society where we have our business operations. So these are the media, NGOs, other parts of the society. So it's broad, of course.
Right. So Lorena had to leave us, but so I asked actually one of the signed up members of the audience today to join us, who happens to be the CEO of the Swedish Taxpayers Association, Mr. Christian Ekström. Are you online here so that you can join the panel, fill the panel, basically? If Clara,
I do hope so. Do you hear me?
Yes, we are. We do indeed.
Right,
Thank you for joining us this morning. The Swedish Taxpayers Association is commonly known as promoting another issue, really, which is the higher or lower income or higher or lower tax, and to not waste taxpayers' money. But how do your members respond to the increased demands on transparency in tax behavior and these stakeholder? So let's start with a transparency issue. How is that regarded among your members?
Well, I do think that most companies, we have companies and private citizens as members in our organization. And I think that most companies want to do the right thing. They want to be transparent and show the world what they do. And that is possible if you have a clear and transparent and competitive legislation and tax policies and a level playing field. So I think that most companies embrace the thought of transparency. But what I think is forgotten much in this good morning discussion, which has been very interesting, I think it was the subject was touched by Mr. Tegelberg, but the company's biggest contribution to society is that they produce better and cheaper products and services, and that is a far more important contribution than tax or even revenues or the ability for people to work there, and that is profound for our welfare system. Mm-hmm. And that is much more a much more important thing that they contribute with than the taxes, actually. But of course, they should pay their fair share of taxes.
Yeah. So you're pointing out that the benefits from companies that they contribute with to society is the primary reason for their existence, and should, of course, if that doesn't work, then there will be no taxes and no contribution in the primary reason for being. But that has been the main topic of the discussion for so many years, I think. So how would you regard the new angles and the calls for more stakeholders to be included in the picture? For instance, to not just serve the shareholders' perspective as you are obliged by law today. I mean, shareholder laws says it's illegal to not serve your owners or your shareholders' interests. But how would you then respond to the call to include more stakeholders, like the planet or like the society, into the picture?
Yeah, if you have transparent rules, for example, the carbon dioxide tax, we have that, and that's a way to decrease the emissions. So that's a good thing if it's equal for all, and that will save the environment. But the stakeholder theory sounds very much to me like the politicians are to set the rules, and a lot of rules. And it very much sounds to me not like a new theory, but like old socialism. And
okay.
if we add all those rules stated by politicians, I think there's a risk that we will see less revenues or no revenues, and that will not lead us to solve big problems that we face environmentally, for example.
How Axel, would you comment on that, and how is that seen in practice? Do you have any experience from how it's turned out when you include a broader stakeholder perspective? Does it really affect turnover and profits in the companies?
I don't have any I don't have any research on that, but I don't really understand the argument. I understand that the business of business is to do business, but that does not mean that they do not have to pay taxes. And also when it comes to this shareholder theory, which you said, Jonas, is stated in law, that does not include that you should not consider the cost you bring into environment and society, because history shows us that as it has been applied this far, does not consider social and environmental costs. So you can call it stakeholder theory, you can call it shareholder theory, a soft shareholder theory, but the important thing is that someone takes responsibility of the cost that they put on environment and the social, because we have such costs. And one way of doing that is to be transparent about the cost that you causes, and that is what we today call stakeholder theory or stakeholder capitalism. And I don't think that it will affect your profits, because if you think being responsible affects your profits in a negative way, then you kind of presume that you can make profits in a way that affects environment and social negatively. So I don't see the problem here, actually.
Okay. Anders, you mentioned before that you wanted to perhaps get a bit more credit for the tax policy behavior and the tax policy work that you're putting into to your everyday work and your taxation policies. And you also said it's not perhaps a question of paying a lot of tax or a little tax, but it's rather the impact per tax payment, the impact you have on society per tax payment. Would that be a fair way to describe a metric that would be easier, or a single metric that could guide your work, your policy work?
Thanks, Jonas. And yeah, going back to the comments before, I think, of course, every company should make revenues. And if they don't have revenues or profitable business, they will not pay tax, as mentioned before. And then I think we're also focusing a lot on corporate income tax, which is a minor part of the company's tax payments. And also, if you see the total contribution to society, that is, and a lot of countries are having no corporate income tax or very low, and some countries don't have a VAT regime or other things. So there are potential so. The politicians are, of course, free to get clear guidance and rules, and as you mentioned, Christian, that is, of course, stipulated in tax law and legal jurisdictions. So that is the foundation, and so for me, and this having more credit for the work we are putting into, I think we see a benefit of doing this. I think that this is what is expected as us as part of the society. So in that area, I don't think that is a problem. It's more how do you compare? How do you compare companies who are so-called good or bad in this area? And I think that is so that by the end of the day, a consumer can choose. If this is an aspect of a choice, if the price is equal, the quality is equal, maybe this is something that would drive business to be more profitable, also long term, of course. So okay. I don't know if that's.
Yes, indeed. Axel, you mentioned also, I saw this graph that you said there was a decoupling of GDP and societal development. But I couldn't see on that graph at what year that was going different ways. So we saw growth or GDP go up but we saw societal development stagnate. And I don't know by which metric you measured societal development there, but it was a clear breaking point at some time during the 1900s, I believe.
Yes, it was the Genuine Progress Index, which was flattening out at the year 2000 compared to the gross domestic, the gross national product, which was increasing. And the point with that figure was to show the gap between the two, and to explain that this gap is the value of the social and environmental cost that is caused by focusing on the gross domestic product.
Yeah, the point was clear, but I was curious what year that happened, because
I couldn't find any more. I could find some more recent, but they were not. This was the United States. I had some on Vermont or and also Maryland. There are 2 states in the US that has adopted these metrics, but I'm sorry, it was quite.
Why I'm asking is because it gives us a time perspective on when things have we have increased GDP in vain, or without the actually expectation, or without being rewarded for it as citizens, or as GPI subjects.
I think the mid 60s is the breaking point, and it's also, if you look close to this metrics, you see that decreased leisure time is a negative aspect, and when you measure that, you take the leisure time from the mid 1976, I think.
Okay.
Yeah. So
mid 60s, we see a decoupling between perceived life quality and GDP, and GDP still goes on, but perceived life quality, or progress, general progress in the world,
decreases, flattens out and decrease.
How do you, Christian? You represent the Taxpayers Association and your members, and you are, as I understand it, predominantly looking for the GDP metric to guide us. But how do you respond to that kind of decoupling of progress with GDP?
Well, I think it depends on what you measure, because I'm not sure if you ask somebody who has gotten, for example, cancer treatment the recent years, if they would be happy with the standards from the 1960s, that they would say that GDP growth was worthless, because I don't think it's actually true. So that solely depends on what you measure. And I strongly oppose to that idea, because we can have economics means that you use resources in the most the best way. That's the meaning of economics. And if we don't have economic growth, you have to answer the question: who is not getting anymore? Who is left behind?
Yeah, the question is not having economic growth. It's having additional perspectives on it. Axel, you were waving there to get into the.
Yes, well, it's an irrelevant point you're making there, Christian, because the thing with this GPI is that it of course includes the value of research and development, but it excludes the costs of person getting cancer, or the increasing of unhealthy people. So I think your point would be much clearer with this GDP index, because it would show the research and development as something good, but it will also show increased unhealthy population as something negative, not as something positive, which the GDP or gross national product shows. So I think you would be very satisfied with that measurement relating to the point you're trying to make.
Yeah, I hope so. But we are healthier today, and the only way to, I think, tackle the, for example, environmental issues is to do that with market economy and, of course, with growth. Because I don't think that large parts of the world would accept those who live in poverty would accept lower growth.
What would be the Taxpayers Association's suggestion to include the long-term goals into a taxation scheme?
We don't oppose to taxes on harmful things, and actually I think that some harmful things should be forbidden. You can have taxes as a driver for change, for example, on carbon dioxide, but we could also have legislation forbidding some use of some techniques, for example, to ensure that people don't get sick or die or get ill. And we have a lot of these types of laws even today.
Okay. Axel, you were waving again.
Well, yeah, as far as I know, that the economic growth is not happening in the poor countries, but it's happening in the rich countries. So when you say that you don't think that the poor people would not like us to resist from economic growth, that's not how it looks like. It's like the rich people that getting even more economic growth, and that's not sustainable, and we all know that.
But excuse me, that is actually not true, because what has happened in South Korea for the last 50 years, or China or Nigeria, for example, these are poor countries that has had a lot of growth.
Yes. Well, perhaps we shouldn't. You can see who is getting the growth in China, for example. Is it the poor people? They have been wealthier, yes, but have they been as much wealthier as the rich people? No, I don't think so.
So I perceive that there's an agreement on that taxation should be more transparent. There's a benefit for all, and how that can be done, of course, can be with more or less involvement by law or by politics and policy. However, the stakeholder perspective seems to be a bit more a touchy subject, to include other people than the corporate owners into the beneficiary group of a company's outcome. But I'm still interested, Anders, how you see yourself as a head of tax. That's usually not the profile of the company, but you actually have the position with your responsible taxation story to become the breakfast table discussion hero of companies. The tax manager directors are actually in the seat where you can be the superheroes of how responsible corporate behavior can be defined. Do you feel that responsibility or that opportunity as a head of tax at Vattenfall?
Thanks, Jonas. I think you started the seminar with saying that taxes is perceived as a dull and boring subject, and I think except for the people that is engaged in those matters on a daily basis, and I am and have been that for 15 years, so I will continue that. And I think this is an aspect that takes another aspect to be better to inform and educate internal and external stakeholders the importance of tax within the company. Mm-hmm. And that is not an easy exercise to do, but I'm willing to take the next steps to see where we can contribute in different networks that we are joining. And that is also interesting to see where we got people from tax authority, other multi-international companies, NGOs, owners' perspective, and big fours when they come with different aspects on this subject. And so
does the communication department of Vattenfall have a good understanding of how on what you contribute with and how that can be turned into brand or consumer story?
I think we are starting. We have started that, and I think it's a good cooperation with CSR and Communication in Investor Relations Department because this is something that we voluntarily disclose in our annual CSR report and also public tax policies, etc. So I think that is working well, but it can also be developed, of course, because communication persons is not tax experts, as we are not communication experts. So we need to work together.
Axel, thank you. Axel, do you think we will see more head of tax people on the billboards making the branding their corporations for sustainability in the future?
Yes, because tax is something that engage people, and there are like a stage that needs to be filled. Some tax executives can turn out to be public heroes by saying, okay, now we are contributing to society in this way. And I've seen tax reports that have tell that story, that this is our contribution to society. Doesn't say this is how much tax we pay. This is how we contribute, and I think that really makes people like them. And Anders is a good example, I would say. Yeah.
Thank you. Yeah. Do you have any examples of that happening today? Or
yes, I have. You can, for example, look at the British organization Fair Tax Mark. They accredit corporations that they consider pay a fair amount of taxes, corporate taxes, and they also they also let those tax executives that they work with get some space in order to tell their story. So I could you can search on the internet and you can find some really good examples.
Good. And Christian, would you say that then the contribution to society per tax payment or tax amount paid, would that be a good way of defining a company's contribution to society, or to relate to tax in a new way?
No, I think that's just a small part of what businesses do for society, because when they make products better and cheaper that makes me and us want to buy them, they contribute to society by giving me a better standard. And at the same time, they provide value for their owners, and at the same time, they create jobs. So tax payment is a very little part of that, I would say. But of course, It's important that everybody pays their fair share.
But regardless of how much or how big a part taxes are, the impact or the contribution to society is still worth communicating, as you put it.
Yeah, of course, every company is communicating their value to society by promoting their products, and that's the biggest value. But of course, they also create jobs and other things that are important to us. So, and I think that's important for every company to communicate.
Okay, good. Yeah, thank you. Excellent.
As it said, and this is so interesting to see what perspective we are arguing from, because you can also say, like, it's the workers that creates companies, and they are the reason that the companies can contribute to society with new products. So, I mean, it all depends on what perspective you have, and I think the greatest challenge now is to find good ways to value the costs that we bring onto society and environment. And for example, take China, which was brought up as a good example for economic growth. I saw yesterday pictures from the Beijing. It was not a pretty sight. It was dangerous to be outside. So the economic growth of China has come with an environmental cost and a social cost, and we need to find ways to value that and to report that to the community in order to make the corporations responsible to cover those costs. And
right.
And one way of doing that is to leave the responsibility to the government. But if the government should have the responsibility, then they need tax revenues, of course. Otherwise, they cannot deal with the challenges.
So, closing the discussion, I would like to ask you, each one of you, what do you see as the most important call to action for companies these days? Starting with you, Anders Tegelberg, head of tax at Vattenfall. What would you say to all other companies out there, or to yourselves, would be the most important call to action from now on?
It's twofold. I should say, collect data, information, good examples from what is happening outside the company, and then connect to the CSR department if you have one, to connect those two expertise. I think it's crucial.
So turning good tax behavior into good communication, and eventually head of tax into superheroes on the breakfast table. Sorry for exaggerating or summing up, but summing up with a bit more extravagant words.
Yeah.
Okay, good. Christian, what do you see as the most important call to action here for companies, for your members?
Explaining to the society how they contribute, not only by paying taxes, but giving people work, generating new products and new services that benefits us all.
Yeah. Okay. Good. And Axel, finally, what will be the most important call to action for companies from a associate professor's point of view?
Well, read 3 books on sustainable development, and then try to position your company within the future society and see how it can contribute to get to reach the global goals. And how does tax play into that challenge?
Basically, summarizing that, the challenge here seems to be to connect the 10-year perspective with the 3-month perspective, and turn that into make businesses stay in business, so that they can continue to contribute to society. I think this has been the most inspiring conversation of this morning, hopefully, and hopefully you have thought so as well as the audience. We look for, and thank you so much, Axel Hilling, Associate Professor from Lund University, Anders Tegelberg, Head of Tax at Vattenfall, and Christian Ekström, the CEO of the Swedish Taxpayers Association, for joining us. And also thank you in retrospect to Lorena Sorrentino, Manager Markets from CSR Europe. We will be back with more seminars or webinars from co-arranged by The Bridge and Sustainable Future Hub from Lund University later during the spring. Right now, the next date is not set, but stay tuned, and we will communicate this through our websites, one of them being thebridge.se. Thank you for joining us this morning. I hope you have a continued pleasant day and enjoy the contributions of corporate responsible taxation in the future. Thank you, and good morning.
Thank you so much.
Thank you.
Thank you.